Lee Harris, staff writer at the American Prospect, whose latest piece is called Wall Street's Big Bet on Rewiring America. Lee, thanks so much for joining us today.
Thanks for having me on, Emma.
Of course. So, your piece starts discussing Ithaca, New York, particularly, but this story is much broader than Ithaca just in and of itself. So if you don't mind starting there, why I guess Ithaca was so important and illustrative of larger trends around climate politics in the country.
Yeah, for sure. So my story more broadly is kind of about how Wall Street is investing in putting clean energy systems into low-income housing. And since the IRA, the Inflation Reduction Act, created these billions of dollars in clean energy subsidies, banks have gotten really interested in putting heat pumps and solar panels into poor neighborhoods. And on one level, that's something we should probably want, because for decades, private banks have been underinvesting in these poor areas. It's really hard for building owners in inner cities to get loans for building upgrades. But my story kind of looks at in Ithaca and then more broadly how these investments are being made with very little public scrutiny or oversight. And in particular, they're being led by this startup that's really secretive about its model. So just to zoom out for a second and talk about what's happening. Cities are trying to upgrade their buildings to clean energy, right? And this is a huge undertaking. The closest analogy is probably the New Deal's rural electrification program, which brought electric transmission lines to really remote parts of the country. And this is even bigger than that. It's not just about building new transmission infrastructure, but overhauling the 130 billion buildings in America. Super expensive. And if we do it well, decarbonizing isn't just good for the planet. It also could mean, cheaper heating and cooling and reducing local air pollution for buildings. It means lower rates of asthma and allergies in kids. But it has this huge upfront price tag attached to it. Now, Bernie Sanders' original Green New Deal was a $16 trillion investment, something much more in line with the kinds of investments made during the New Deal. And if we were in that world, we probably would have had whole offices devoted to directing these investments from the federal level, with way more investment in local labor forces and more coordination. Sadly, we're not in that world. We're in the world where we got the Inflation Reduction Act, which is a set of tax credits that are run through the IRS. And even with those tax credits, clean energy equipment is still really expensive. So back to my story, enter Bloc Power, which is this startup I mentioned, the subject of my story. They've signed contracts with a number of big and mid-sized cities across the country, including Denver, Menlo Park, Oakland, Atlanta, and Ithaca, New York. And you can jump in here, but to tell you briefly about the model in Ithaca, Ithaca decided to overhaul all of its buildings at once, which or kind of on an accelerated timeline, which makes sense because it's cheaper if you can do bulk orders of heat pumps and if you can bring in a bunch of construction crews at the same time. And it considered issuing a bond to make those investments, but it decided that would be too expensive. And instead it brought in Bloc Power, this tech startup, which has attracted a number of big name investors like Goldman Sachs and the venture capital firm Andreessen Horowitz. Ithaca's leadership said that Bloc Power was willing to provide a lower cost of capital than they would have been able to get by floating a bond. So one of my initial questions for the story was especially in this interest rate environment, why are investors getting interested in a fairly complex and untested deal like this with low rates of return? The CEO of Bloc Power told me they're only taking single-digit rates of return. Why is Goldman doing this when it could be making a lot more money elsewhere? And I have a couple potential answers to that from the story, but I'll stop there.
Yeah, well, I mean, that is very fascinating. And there's a lot that I want to hit on that you mentioned there. One, how the IRA does not have conditions that would ensure that union workers are set to be working on these kinds of clean energy initiatives, is my understanding. A lot of this is just essentially giveaway to private developers, and it creates a vacuum for venture capital and Goldman Sachs or whatever to fill, as opposed to the much more robust kind of initiatives that you would describe in the New Deal, where that would not be possible. I mean, a lot of what you write about is, I think, the inevitable cracks being filled by these kinds by Wall Street when that could have been done by, say, public funding.
Right, exactly. This was not inevitably the world we would be living in. But the way that they're making this pitch to investors is really interesting to me because, like I said, they claim at least that investors are only taking single-digit interest rates. However, how are they making it attractive? For one thing, Bloc Power's marketing it as an ESG investment. So ESG is like environmental, social, and corporate governance, I think it stands for. And banks have been marketing ESG as, like climate friendly or fighting racism or whatever, but it's completely unregulated. You can slap an ESG label on anything, including like Exxon stock. But despite that, investors have continued to make these ESG offerings. He wants to securitize these equipment leases for heat pumps in low-income homes and sell them as part of a national ESG portfolio. They're also producing on the blockchain something they're calling environmental justice carbon offset tokens.
Oh boy.
Which are basically big polluters can come in and say, we're investing in reducing emissions in low-income housing, which it's not yet clear that they're doing. I asked Bloc Power for examples of successful projects they've completed, and they declined. But I think the offset token industry itself is pretty dubious. But I think like the biggest reason that private investors are getting interested in still relatively low profits in this new energy industry is that they see that the whole energy system is being overhauled. And right now they're less interested in taking a really big slice of profits than they are in exercising control over the design of the new system that's coming into being. So for example, in my interview with Bloc Power's CEO, who's by the way, super charismatic guy, has received tons of positive press coverage, he talked about how a big part of their model is collecting detailed data on household energy consumption. And he talked about this, there are kind of long-running proposals for something called virtual power plants. The idea is that if households could tweak the time of day when they're consuming energy or make different like micro tweaks to energy consumption, like running their toaster oven or their dishwasher at a different time of day, that could, at the aggregate level across the grid, lead to significant energy savings. Now, on one hand, that's a promising model and like optimizing the time of day that households are consuming energy.
Though? Yeah,
I'm getting there. I mean, if it were run by a benevolent God who came in and did this in the interest of low-income houses, it could actually save them money and potentially even they could get money back. But what we're talking about here is a tech startup with a bunch of powerful investors getting a stake in when low-income families use their toaster. A friend said to me, this is real. This is the future liberals want energy.
Exactly. Well, there is that paternalism element that is troubling and also gives climate policy a bad name. And at the same, but the reason it gives it a bad name is because there's a for-profit model undercurrent to it that is troubling. Because if climate policy is going to be built on the back of, maximizing returns for investors, the breadth of it is going to be severely undercut. I mean, I want to return to something you said about them packaging these pumps and then selling them. Like they're packaging the energy cost savings from these pumps in low-income housing and selling that to investors. How does that work?
Okay, so yeah, it's sort of counterintuitive to think of because they're talking about profiting from savings on future energy expenditures. So big energy systems like universities have done this for a long time. Something called an ESCO will come in and offer a deal for a building owner to pay what he was expecting to pay over the next 10 years in energy costs, but the ESCO will come in and make the building more energy efficient and then pocket the savings or pocket some portion of the savings. But and maybe that makes sense, for a university or whatever, but we're doing this huge public investment that has been marketed as not only being good for the climate, but also being good because it means energy savings for regular consumers. And it seems to me that if that's true, even if there's an upfront cost of capital and the energy savings pay for that, then the consumers should still be able to pocket the energy savings. This is totally possible to design with something like a nonprofit ESCO,
right.
a government run agency that just
well, where it goes back to
the
user of the energy as opposed to being outsourced to a for-profit model for investors.
But instead, we're doing this on the balance sheet of Goldman and giving them considerable control in the process.
That is immensely concerning. I mean, so in terms of control, what does that look like, right? What does? Yeah, go ahead.
We are still in the pretty early stages, and a lot of this is going through startups like Bloc Power, which is a really big player in this space, which is signing individual contracts with different cities. So we don't know a lot about the specifics of what these deals will look like yet. But my point has kind of been, rather than some big federal agency negotiating on behalf of the public and making sure that these deals are struck according to really favorable terms, you have cities with kind of huge asymmetries of information trying to negotiate with this kind of shady startup that they don't know a lot about. These deals might be different city to city, and then the prices that they give consumers vary from house to house. Their whole model is that they specifically analyze the risk of doing a rehab project at a given house, and then they give kind of individually negotiated leases to these different homes. So those could be on, you're just basically trusting Bloc Power to give people good deals. And it seems to me that the kind of logic should be completely flipped, that if we are bringing in private finance because of the scale of the investment needed, the government should be extremely vigilant in making sure that these deals are consistent, transparent, that the public knows exactly what's going on.
But that's part of why, and you write about this, they're targeting mid-sized to smaller cities, and that asymmetry benefits Wall Street.
Yeah, it's a good point. A lot of these cities don't have the resources to vet deals thoroughly or really understand the contracts they're signing. So I think this will be a thing to watch in the next couple of months, because the design of the IRA, not just in home retrofits, kind of across the board, is about striking these big partnerships with private investors. But who's analyzing the terms of those deals? It's really diffuse, with a ton of opportunity for fraud and corruption, and just for Wall Street to make off with incredibly high profits.
I want to return to the low-income housing angle to this, because this country is desperately in need of low-income housing. There's been, for decades at this point, a federal kind of moratorium on funding for new public housing, and yet this is the form that it's coming in now. I mean, that's a bit concerning, given the desperate need for low-income housing, that this kind of retrofitting is now tied to a for-profit model.
That's a good point. I don't know, and I wonder what kind of effect it'll have on building housing. I mean, in some ways, it's easier to build, whether you're doing it publicly or privately, new housing stock that's energy efficient, but it's really hard and expensive and complicated to go into old housing stock, and so many cities have aging housing that hasn't been upgraded in decades, and retrofit it to be clean and less polluting.
Yeah, right, exactly. So returning to Ithaca, do you see this model being replicated more broadly in other cities, and what are the larger scale concerns that you have about this kind of taking hold elsewhere?
I think the long-term question is that it's kind of no longer a question whether major institutions of private finance will be involved in the energy transition. They're kind of the model we've chosen to go with, as I said at the start, is not this robust public Green New Deal that's about investing in local workforces and union labor and all the way up through the supply chain, but instead about bringing in most of the capital from the private sector. So at that point, I think the responsibility of the public will just be oversight and making sure that they're not getting fleeced in these deals. And so far, I don't think that's happening.
I hear that. Lee Harris, staff writer at the American Prospect. Please read this piece. It's fascinating. Wall Street's big bet on rewiring America. And I'm looking forward to more from you at the American Prospecting, one of our favorite places to highlight here on the Majority Report. So really appreciate your time today, Lee.
Thanks so much, Emma. Bye-bye.
Of course.